So you want to get a 2.75% mortgage rate, and you see it advertised. What you've seen is you've seen a listing, and on the listing, in the description, it said that there was an assumable loan available, and it was at 2.75%. So you call up the listing agent, explain that you're interested in the house. Let's say the house is listed for $600,000, and you ask the listing agent, you say, hey, listen, I'm interested in assuming that 2.75% loan. What's the balance? And the listing agent says to you, the balance on that house is $350,000, and it is available for somebody to assume. And you say, great, I want to do that process. So the listing agent explains to you that they've reached out to the existing lender, because that's who you're going to have to get the loan from, and you're going to have to get qualified for that loan. That process will take between 45 and 90 days. And when it's all said and done, you will have a $350,000 loan at 2.75%. So then the listing agent says, but the house is listed for $600,000. So the additional $250,000, how are you going to handle that? And you go, well, you can either pay cash for that, or you can try and get a second mortgage. And this is where I come in. So a lot of times people will call me up and say, can you help me with a second mortgage because I want to assume somebody's first mortgage? Now, I personally don't have a product for this, but what you're going to need to borrow is $250,000. So this is going to be 100% second mortgage, and you're going to have to see whatever the payment is on that. So you're going to have two mortgage payments. Now, typically second mortgages at 100%, these rates are above 10%. So they're going to be 10, 11, 12% typically. Now, you don't have to get that mortgage if you can just put the cash down. If you have the $250,000 cash, you're in good shape. In addition to the $250,000, you're going to need to pay the closing costs because there's no seller help or anything like that, and you're going to pay all the transfers. So in this particular case, it'd be probably about $20,000. So all in, you need about $270,000. The $250,000 for the down payment, $20,000 for closing costs, and this money has to come from you. What's really interesting is when you start looking at the 2.75% first mortgage and the 10, 11, 12% second mortgage, typically that payment is pretty close to what it would be if you just got a regular loan at whatever today's rates are. This product works really well if you have good credit and you have a lot of money to put down. In those situations, you can assume a loan, you can put the cash down, you can pay the closing cost, and you can assume a loan at 2.75%. But if you're not prepared to put a ton of cash down, it's probably not going to work out.